Hello everybody and welcome to the CMC Markets Technical Insights video for the week of May 6th. My name is Toby from Trade with Precision, and I'm looking at the dollar CAD foreign currency pair, looking to walk you through a couple of different time frames here, the weekly, the monthly, and the daily, and see what I can point out to you in terms of key levels and potential trade setups going forward. So I'll just blow up the monthly chart here. Interested in this whole pattern right here, which goes back quite a ways, took quite a long time to set up, but that key level that you can see here right around 146 back in, what was it, January of 2016, and then most recently when it retested that level was at a very memorable date, March 2020, last year, which was when the pandemic COVID-19 hit. You can see a very swift and fast rejection off of that level, which ensued then another 12 to 14 month decline in weakness in the US dollar. Once price put in a lower high right here and then broke through the previous swing low right here, price now is in technically a downtrend of a lower high and now a lower low, and then consolidating right here at this 122 level, which is basically the next level of support. And then another level of support after that would be right around the 120 level. And so that's what I want to take a look at, a little more granularity at some of these other time frames, like the weekly. We'll blow that up. You can see all those monthly candles now broken down into weekly candles, the 50, the 20, and the 10. Nice flowing and fanning out to the downside. The 200s even sneaking in there. Any rallies that you can see back up into the sell zone are met with these rejection or bearish candles. Once a break of the low happens, then price tends to resume the downtrend. You can see a number of these candles, rejection candles, in the sell zone between the 10 and the 20 period moving average. Another one right there, break below the low, and all of a sudden price is now down at that 122 level, which I think may provide a level for a reasonable bounce, maybe not back up into the sell zone on the weekly chart, but perhaps a bounce into the sell zone on the daily chart. And so let me just draw in a quick level right here on terms of what I'm thinking. Put a little support level right about there. And you can see all the different levels that price has touched there previously. That previously was a level of support. If price were to retrace to that level, that would be right back within that sell zone in the downtrend, and then right up against that good price barrier where we might start to see then price putting in and starting the that rejection candle. And that's really, I think, what I'm looking for. You can see the consolidation right here. Price may bounce or continue down through that level. It may bounce up, but I'm only going to be interested if price bounces up into this level and gives me a level that I know that I understand. That would be a good solid barrier for sellers to then enter, for price to reject that level, and then to look to either retest this level or then to retest that level somewhere down around that 120 level, which was the other one that I was pointing out. So everything looks, according to my strategy, looks in terms of what I'm looking for is starting to align here. Price can certainly continue further without any rebound. But what I'm looking for is to engage the markets on my terms, and only if price rebounds into the sell zone up against a level of previous support that should now become resistance would then define my trade strategy. So hope that technical analysis helps. Have a great rest of the week trading, and we'll look forward to talking to you next time. Take care.